Welcome to the lecture number 17 of financial statement analysis and valuation. Now we will start doing the analysis by using the ratios as we had discussed in the previous lecture. So the first ratio relates to the liquidity of short-term assets related debt paying ability. Now we know what liquidity is. Liquidity means how quickly you can convert your assets into cash. That is called liquidity. An entity's ability to maintain its short-term debt paying ability is important to all users of financial statements. It means that how quickly you can, how easily and how quickly you can pay the short-term debts that your company is facing. If the entity cannot maintain a short-term debt paying ability, it will not be able to maintain a long-term debt paying ability. Why? Because if it is unable to pay the short-term debts, the debt will keep piling and it will find it very hard to get through it as the debt keeps getting bigger and bigger. It will end up paying a lot more interest on it as well. Nor will it be able to satisfy its stockholders, because the stockholders, since they are the true owners of the company, so they always look for any event which can affect or destabilize the company. Even a very profitable entity will find itself bankrupt if it fails to meet its obligation to short-term creditors. The ability to pay current obligations when due is also related to cash generating ability of the firm. This we will deal with in next chapter. When analyzing the short-term debt paying ability of the firm, we find a close relationship between the current assets and the current liabilities. Current assets we know, जो बैलेंस शीट में आपका एसेट सेक्शन होता है उसमें करंट एसेट्स आपके पहले आप लिस्ट डाउन करते हैं एंड जो करंट लायबिलिटीज है वो सेकंड सेक्शन में लायबिलिटीज में टॉप पे आता है. Generally, the current liabilities will be paid with cash generated from current assets. For example, आपकी current liability है आपका आपने you bought raw material on credit. That is your current liability. So that current liability you will pay by giving cash, which is your current asset. As previously indicated, the profitability of the firm does not determine the short-term debt paying ability. In other words, using accrual accounting, the entity may report very high profits but may not have the ability to pay its current bills because it lacks available funds. What it means is that maybe you are doing a lot of sales, but most of the sales are on credit. So as per the financial statement, you are earning a lot of profit क्योंकि आपकी sales बहुत ज़्यादा हैं, but you do not have the cash. Why? Because वो जो तमाम आपकी sales थी, वो on credit थी. Current assets, current liabilities in the operating cycle. Current assets are in the form of cash, will be realized in cash or conserve the use of cash within the operating cycle of a business or 1 year, whichever is longer. This definition we did when we're doing the section of current assets in the balance sheet chapter. The 5 categories of assets usually found in current assets listed in their order of liquidity means how quickly you can convert that current asset into cash. These include cash, marketable securities, receivables, inventories, and prepayments. Other assets may also be classified into current assets, such as assets held for sale. The operating cycle for a company is the time period between the acquisition of goods and the final cash realization resulting from sales and subsequent collections. So the operating cycle is okay, once you have got the goods, then you uh, sell the goods, and after the sale, when you receive the payment, that is called the operating cycle for a company. For example, a food store purchases inventory and then sells the inventory for cash. The relatively short time that the inventory remains an asset of the food store represents a very short operating cycle. Why? Because you buy the stock, you sell it quickly, and you get the cash. So the operating cycle is very short in this scenario. In another example, a car manufacturer purchases materials and then uses labor and overhead to convert these materials into a finished car. A dealer buys the car on credit and then pays the manufacturer. Now you can see in this scenario, the operating cycle is pretty long when you are into manufacturing cars and then selling those cars. Now, what is cash? Cash is a medium of exchange that a bank will accept for deposit and a creditor will accept for payment. So, cash basically is a medium of exchange. Through it, you can you can deposit that cash in a bank, and you can give that instrument of exchange to any creditor as a form of payment. That is called cash. To be classified as a current asset, cash must be free from any restrictions that would prevent its deposit or use it to pay creditors classified as current. If restricted for specific short-term creditors, many firms still classify this cash under the current assets, but they disclose the restrictions. The cash that has been set aside or restricted for a special purpose is called restricted cash. So जो normally आपका restricted cash होता है, you show it separately in your balance sheet. Cash restricted for short-term creditors should be eliminated along with the related amount of short-term debt when determining the short-term debt paying ability. Why? Because the cash which has been restricted, you cannot use it to pay your debts. So that is why it should be set aside. Cash should be available to pay general short-term creditors to be considered as part of the firm's short-term debt paying ability. It has become common for banks to require a portion of any loan to remain on deposit in the bank for the duration of the loan period. These deposit terms, these are called compensating balances. Compensating balances होते हैं कि when you get loan from a lender, so a lender says that a fixed amount you have to keep in the uh, bank account. So that is called the compensating balances. What it does, it reduces the amount of cash available to the borrower. Why? Because a certain amount of that borrowed money has been set aside and put in the bank account as compensating balance. And they increase the borrower's effective interest rate because you pay a much higher interest rate on the money that you got as uh, that you money that you borrowed. Since you're not getting all of it, so you end up paying more interest on it. Compensating balances against short-term borrowings are separately stated in the current asset section or notes. Compensating balances for long-term borrowings are separately stated. Remember, we always have to distinguish between short-term and long-term assets and short-term and long-term liabilities. That is why if जो आपका compensating balance है, if it is for a short term, you will put it in the short term section. If it is for a term longer than 1 year or an operating cycle, whichever maybe is longer, so you put it in the long term compensating balance section. The cash account on the balance sheet is usually entitled cash and equivalents, or cash and certificates of deposit. You must have seen these titles when we were doing the balance sheet chapter. The cash classification typically includes currency and unrestricted funds on deposit with the bank. Two major problems are encountered when analyzing a current asset. So the first problem that you encounter is determining a fair valuation for the asset and determining the liquidity of the asset. So when we talk about cash, these problems apply to cash assets only when it has been restricted. If the cash has no restriction on it, so it has a fair value, which is the face value, and it is in a readily liquidable form of asset. Thus, it is usually a simple matter to decide on the amount of cash to use when determining the short-term debt paying ability of an entity. For example, if you have to pay $80,000 to a supplier. So if you're using cash, so it is very simple for you to judge how much you will have to pay, because as you know, cash has a face value attached to it. Marketable securities. The business entity has varying cash needs throughout the year because an inferred cost arises from keeping money available. Management does not want to keep all of the entity's cash needs in the form of cash throughout the year. The available alternative turns some of the cash into productive use through short-term investments. If you remember, we did marketable securities. These are the securities that you do only for short-term investments, which can and these can be converted into cash very quickly and whenever the need arises. To qualify as a marketable security, the investment must be readily marketable, and it must be the intent of management to convert the investment to cash within the current operating cycle or 1 year, whichever is longer. Remember, the it is a short-term investment, so it should be 1 year or one operating cycle. So the key element of this test is managerial intent. Okay, what is the intent of the management while it is going into buying the marketable securities? What is the real intent and reason behind it? It is management. It is to management's advantage to show investments under marketable securities instead of long-term investments, because this classification improves the liquidity appearance of the firm. When the same securities are carried as marketable securities year after year, they are likely held for a business purpose. For example, if you remember, we did when we were doing the long-term investments. So we had discussed that it is normally for a business purpose. For example, you buy marketable securities of a major supplier, and or maybe in order to have a good relationship with the company, आप उसकी long term marketable securities buy कर लेते हैं. So that is considered a long term marketable security, a long term asset. Investments classified as marketable securities should be temporary. Examples of marketable securities include treasury bills, short term notes of corporations, government bonds, corporate bonds, etc. Debt and equity securities are to be carried at fair value, as we had done in the previous chapter. An exception is that the debt securities can be carried at amortized cost if classified as held to maturity security. But then again, we're talking about the long-term asset. And since it is a long-term asset, then it cannot be used to pay your immediate debt. So this is the securities liquidity must be determined in order for it to be classified as a marketable security. The analyst must assume that securities classified as marketable securities are readily marketable, means these can be readily sold for cash. Exhibit 6.1 presents the marketable securities on the 2009 annual report of Nike. It discloses the detail of the marketable securities account. Many companies do not disclose this detail. When you come to this short term investment section, तो आप देखेंगे यहाँ पे they have given the amounts for year 2008 and 2009, and then in the notes it has also the company has also given details of what it means by short term investment, and then it has also given the calculation of what sort of marketable securities it holds. Like US Treasury and agencies, it holds this much, and then corporate commercial paper and bonds, it holds marketable securities worth 391.2 million. So the total comes to 1164 million US dollars. Now receivables. An entity usually has a number of claims to future inflows of cash. These claims are usually classified as account receivable and note receivable on the financial statement. Just say whenever we were doing the balance sheet, so we used to have account receivables, the primary and note receivable. The primary claim that most entities have comes from selling of merchandise or services on account to customers. It is called trade receivable. For example, if you sell a customer on credit, so that will be called trade receivable, because it is this receivable is directly linked to your trade activity, which is your main activity. With the customer promising to pay within a limited period of time, such as 30 days. Other claims may be from sources such as loans to employers or a federal tax refund. Claims from customers, usually in the form of account receivable, neither bear interest nor involve claims against specific resources of customer. In some cases, however, the customer signs a note instead of being granted the privilege of having an open account. Usually, the interest-bearing note will be for a longer period of time than an account receivable. So, जो आपका note receivable होता है, which has interest attached to it and which is also, written down, वो जो होता है आपका, it is normally of a longer nature than a account receivable. In some cases, a customer does not pay on an account receivable when due, then he signs a note receivable in place of account receivable. The common characteristic of receivable is that the company expects to receive cash sometime in the future. This causes two valuation problems. First, a period of time must pass before the receivable can be collected, so the entity incurs cost for the use of these funds. Second, collection might not be made. Now, the first one, a period of time must pass before the receivable can be collected, relates to the fact that the money loses its value as the time progresses. And the second one relates to the concept of bad debts or impairment of receivables. The valuation problem from waiting to collect is ignored in the valuation of receivable and of notes classified as current assets because of the short waiting period. Since the waiting period is very short, normally 30 days, so we skip that the valuation of receivables completely. The waiting period problem is not ignored if the receivable or note is a long term and classified as an investment. So if it is long term, then we do care of the waiting period adjustment with respect to the value of cash. Now, the when we talk about the bad debt, so we know that the note receivable simply may not be collection may not be made. Why? Because a customer owes you $20,000 as account receivable or trade receivable, and if the customer is unable to pay, so that is a problem which is directly linked to the concept of receivables, that you simply may not get the money back. Estimated losses must be accrued against income and the impairment of assets must be recognized. You see, you have to revalue the receivable figure frequently to make sure that you are up to date with the actual value of receivables that you are expected to receive. Both of these conditions are normally met with respect to the uncollectability of receivables, and the amount subject to being uncollectible is usually material. Thus, in most cases, the company must estimate bad debt expense and indicate the impairment of the receivable. It is difficult for the firm to estimate the collectability of any individual receivable, but when it considers all of the receivables in setting up the allowance, the total estimate should be reasonably accurate. The problem of collection applies to each type of receivable, including notes. So ये जो आपका bad debt का problem है, it applies to pretty much all types of receivables, whether you have account receivable, trade receivable, note receivables, ये तमाम चीजों में this problem can arise. But what we do, so they take care of the bad debt concept with respect to all types of receivables. The impairment of receivables may come from causes other than uncollectability, such as cash discount allowed, sales returns, and allowances given. For example, a customer bought a car from you on account, and after 3 months, when he's unable to pay, so the customer says you can take the car back. तो उसमें क्या है कि obviously then you'll have to sales return होगा, you'll have to adjust the sales, and with that you will have to adjust the account receivable, and obviously also the provision for the receivable, you will also have to adjust that. So this is the detail that Nike gives with respect to the account receivables. It gives the net figures, and then it also gives the explanation as to the, what sort of allowance for uncollectible was used and how it was collected. So the total allowance for uncollectible accounts was this much in 2009, and some part was recorded in other assets. So the presented with account receivable जो आपका uncollectible था वो this much था. So you have to take care of कि आपने कौन कौन से account receivable जो uncollectible हैं वो कहाँ पे अपनी financial reports में mention किए हैं. The use of allowance for doubtful account approach results in bad debt expense being, we know इसके दो मेथड होते हैं. एक डायरेक्ट मेथड होता है, उसमें होता है आप डायरेक्टली यू राइट ऑफ द डेट व्हिच बिकम्स बैड डेट एक्सपेंस व्हेन यू कैन नॉट रिकवर इट. एक जो सेकंड मेथड होता है that we have that you have done is called provision. उसमें you have a provision account and you keep adjusting the provision account. So now the liquidity of trade receivables for a company can be examined by making two computations. The first computation determines the number of days sales in receivables at the end of the accounting period, and the second computation determines the account receivable turnover. The turnover figure can be computed to show the number of times per year receivable turnover or to show how many days on average it takes to collect the receivables. Now we will come to the first ratio, that is called days sales in receivables. The number of days sales in receivable relates the amount of account receivable to the average daily use on account. So this is your gross receivables जो आपके total receivables हैं at that time. Then you have net sales. जो आपकी net sales होती हैं वो total sales on credit होती हैं. You divide the total sales on credit by 365 and then you divide that by gross receivables. So you get the figure of days sales in receivables. इसका फॉर्मूला ये है. अब जैसे ये आपकी अकाउंट रिसीवेबल्स नेट हैं 2009 के, जो आपका अलाउंस फॉर अनकलेक्टेबल अकाउंट था वो आपने एडजस्ट करके किया. So these are your gross receivables. Now this is the average daily sales on account जो आपकी नेट सेल्स थी ऑन क्रेडिट वो 19,176.1 million थी. तो उनको when you divide it by 365 you get the average daily sales on account which is this much, and this 52.54 you divide by the gross receivables and you get the days in sales which is 56.3. So what does this 56.3 means? इसका मतलब है कि एक जो सेल आपने ऑन क्रेडिट की it uh, uh, took you 56.3 days to collect it, when normally the time period that is given is 30 days. It means there is something wrong with the collection performance of the company. Right of privilege, you also have to take care of the right of return to privilege. Okay, how much right does the customer have to return the product? So that you have to keep in mind as well. Then the net sales figure includes collectible and uncollectible accounts. Why? Because we cannot with accuracy say how much amount will be uncollectible. So the net sales figure includes both the amounts. The days sales in receivable indicates the length of time that the receivable have been outstanding at the end of the year. This indication can be misleading if sales are seasonal and or the company uses a natural business year. Now, what is a natural business year? Natural business year is when you have um, 52 consecutive weeks of एक्टिविटी. और जो नेचुरल बिजनेस ईयर होता है उस नेचुरल बिजनेस ईयर के एंड में at the end of the natural business year the activity is always low. That is why it is called a natural business year. So अगर आप ये if this calculation of days sales and receivables, if you do it at the end of the natural business year, so obviously the figure that you will get using the example that I have given in the notes, आप देखेंगे this will give you a misleading ratio. So you have to make sure that you should analyze in detail how this ratio was calculated. Assuming that the day's sales and receivables computation is not distorted because of a seasonal business and or the company's use of natural business year, consider the following reasons to explain why the day's sales and receivables appear to be abnormally high. Sales volume expands materially late in the year. Receivables are uncollectible and should have been written off. Maybe you know the receivables that you um, were dealing with, वो from the beginning वो uncollectible थे, तो उनको उसी time पे write off कर देना चाहिए था. The company seasonally dates invoices. For example, एक company जो है वो season wise करती है. So if the company does the invoicing seasonally, तो obviously क्योंकि वो season wise after every 3-4 months होगा, so you will get a higher ratio. So all these factors you have to keep in mind if you come across a high ratio. So this is the end of lecture number 17. The first ratio that we did is called days sales in receivables.